Welcome to Trading Sadhguru. Let us have a look at one-day time frame chart of Nifty. Here you can see that Nifty has formed a pattern. So what is that pattern that we're able to see? So it has made a bottom twice, and here it is appears to be thrice, and all the lows that are made on these waves. Okay, this is one low, this is another low. So all the lows are made a little higher. So they are called higher lows. This is, if you consider this as the starting point, this is a higher low, and this is higher low too. Okay. And when you look at the peaks or tops, or you can say highs, this is let us say this is the first high. Okay. Then this becomes the second high, that is higher high one. And if this trend is to be continued, if market decides to continue this trend, pursue this trend, and make it a higher high, lower low formation, then it is expected theoretically that it might make another high, that is higher high too. Okay, so if market decides to follow this trend, there is no guarantee that this pattern is going to be formed or this pattern is going to be complete. It is ultimately the market which decides whether the pattern is to be made or not to be made. Okay, our job as trader is to get prepared in case market decides to take this pattern. How should we be positioned in case this momentum on upside is stopped out? What should we do? So that should be our preparation. Our preparation, aim of our preparation is not to conclude where market will go. Okay, we can estimate or guess that if at all it goes this side, this is the level to be watched out. Okay, whether it is an upside or downside, but don't be egoistic and don't be stuck to one view. Okay, keep your mind open and be prepared in either direction in case your expectation works out or otherwise. Okay, so it is expected that higher high is to be formed, and okay, theoretically. So there are two possibilities: market continues this uptrend and makes a new high, and yesterday's high will be taken out in the next trading session. Okay, that is one possibility. This is scenario one. So there is some event somewhere else in the world that tariff for started between US and our neighbor China. So US markets are down by 2.72. Okay, roughly, I'm not giving you the exact figure, around 2.7 to 3.5% on the negative side. They're down after the tariff announcement. Okay, so we have seen in the past that these kind of issues, they prolong for a few days, if not weeks. Okay, it won't end in a day or two because it is between the country and one country and another country, that too supposedly superpowers. Okay, so you may expect this to take a toll on world markets, not just US and China, rest of the world markets. India being so closely tied to so many economies, especially the bigger ones. So we may also see the ripple effects. So in that scenario, so this is another case. Second scenario where we are not isolated from the US market, and along with the US market, we will also have a downtrend, if not for a long term, but for time being. Okay, so then this becomes a top. Yesterday's high becomes the top, and you may look downwards. So Okay, so which are the levels to watch out in scenario 1 and scenario 2? Which are the levels to watch out? That we should be very clear in our minds, and we will be taking action according to the real time movements of the market. Okay, we won't get stuck to one view. We won't limit our possibilities. We will keep our mind open, and we will have the levels both on upside as well as on the downside. And also those people who are having reasonable experience, at least 5 to 7 years of trading experience, full time. I'm saying full time. Okay, so those people can look for both the moments. Okay, in case there is a huge gap down, okay, there may be a pullback before the market decides to either move upwards or downwards. Okay, so you can gap down. If you are carrying positions, you can you can liquidate and enter in the opposite direction, and then you can decide based on the actual market momentum. Okay, now let us look at the Nifty from a different perspective. Okay, so what we have discussed, this higher high and lower low. Okay, um, sorry, it is lower high and higher high. Okay, so there is another possibility, another what do you call, way you look at the market. Okay, suppose if I take this as the base point, starting point, so you can also see that there is a trend line that can be drawn. Okay, basically it is a triangle pattern. Okay, so if you if market tends to validate this pattern, so it has to return from here, and the tariffs in global market is a trigger for this. So we may expect correction towards this level. Okay, somewhere previous bottom is around 600, 650. So roughly you can say 24,650 from where we are. Now we closed around 25 to 85. And the scope on upside is very less at the moment. Okay, because of the global parameters due to tariffs and escalations, further escalations. So the upside is limited. So for the purpose of stop loss and um, extreme case scenarios like black swan event, uh, which we don't foresee, suddenly things everything get settled out and market sees positivity in future. So it may even reverse. So in that case, the upside for time being will limit it to 25,400 to 450. Okay. So somebody who is buying pi, so even under normal conditions, there is less scope. Okay. So with this trigger, we may expect market to open gap down tomorrow when market opens on Monday. So this appears to be a decent support. And if this downtrend in global markets continue, and uh, if our market is also somehow more tied to global markets, then we may see breach of this level all the way to 22,800. So where you have a strong support. Okay. So don't say that immediately in a day or two it will reach there. This is the long term, medium to long term target. Let me write down here. So this target is long term, and this is what we are looking at. And tomorrow we can expect testing of 25,050 to 25,000 level. So this may act as a decent support as seen here. Okay. In case this is taken out in the gap down itself or subsequently and market stays there for at least 10 to 15 minutes. 10 to 15 minutes. If market continuously trades below this level, then the next logical support would be around 24,850, breach of which you will come to the this side of the triangle, that is around 650. So 850 and 650, 850 is the most logical downside, maximum downside for tomorrow. Okay. So this may keep for in a day or two. You may see if the downtrend still persists. Okay. So on intraday basis, what one should do. So if somebody is already holding seeds without any protection, what he should do. Somebody who is holding both the positions, either by the way of insurance or by way of some strategy, what one should be, one can do. Okay. So those who are holding Cs, most likely they will be decayed and you won't be able to do anything in case there is a gap down of say around at least 1 to 2%. So the best thing is to square off few of the downside positions extremely away from the market price. PZP is away from the where the market is. The strike price is away from the market value, Nifty value. So those first you can dispose of or book the profits, and you may let the in the money positions run. That is around suppose 25,450 to 25,250. These C's are there now. All the C's. Sorry, it's P's. So, so what I would do as a trader, 25,000 till 150 also. Okay. So I'll try to take profit still here. I let these things run and see what happens towards the end of the day. Below this, whatever the positions are there, I'll try to take at least 50% of them profit. Okay. And remaining 50, I will let it run. Okay. And, so that would be one of the strategies that you can adopt, one can adapt. Okay. And those people who are pure buyers, pure sellers, who define themselves as only buyers, only sellers, and got trapped in the wrong direction, they are going to feel the heat tomorrow, as market is may not, if the trend is to global trend is to continue, so they may not have an opportunity to even to exit, because the decay will be so heavy because of the heavy movement of the market. Then they may have to either take counter positions, or averaging is not a good idea in these kind of panic moments. Okay. So they will likely to face the heat. Those people who have employed strategies where downside and is protected, so they will, their money is protected in a way. So that's all for now. So let us rewind the levels one more time before we close our discussion. Okay. So on a long term, if this triangle is breached, market may move towards 22,800 level. But for trading purposes, for intraday and swing purposes, we will limit our view to maximum 650 on the downside, and the most practical level is 24,850. Okay, for intraday purposes as well as maybe a day or two swing purposes. So first we will see the pattern, how it is developed. So for now, 25,050 to 25,000 is the first support which we expect from the market based on the previous support. Okay. So breach of which the doors will open for 24,850, and sustenance above 850 will again call for move on upside or short covering, whatever you call it, or manipulation, whatever it is one want to say, a move towards 25,000 to 25,050. Or if this level is also not sustained, we may look for 24,650 level, that is around this level. Okay, this is for intraday purposes. So the worst case scenario 650. So the best case scenario on the downside is 24,850. Okay. So manage your risk. Don't try to average the losing positions, and align yourself with the market direction. Those who don't have any positions, they simply over new. They can simply sit outside and watch how the market is moving and the price of options is moving with respect to the market. Okay. So it is important that you align yourself, your view with the original market direction. So finding original market direction is not a big deal when you look at the chart, especially long-term trends, not the intraday trends. It is even difficult for the professional traders or those who are experienced traders also. Okay. So what we will do when market obliges us, like market, we are in sync with the market, where we'll take the profit, where we'll run the profits. And when things are not working out and your view is getting negated and market is moving opposite to your view, then where you would cut the losses, where you limit the losses, where when do you take the losses and exit. Okay, so that defines your overall profitability. So being egoistic and holding on to position, averaging, these are not considered good practices in trading. That's all for now. So I'll try to upload or make videos for you regularly, because there has been a long gap since we last made the video. Okay, I'll try to regularly post my views. So this video and the contents in it are for educational purpose only, and this is, don't treat this as an any investment advice or anything. Okay, so I'm personally a trader. So for myself, I do market analysis, whatever I feel, whatever I see on the charts. So I try to put it in the form of a video, and you may agree or disagree. You may have a different view. So it is whether you invest or you don't invest. That is up to you. You are responsible for your money and investment decisions. So don't consider this as any investment advice. Okay, that's all for now. Take care. Bye bye.